Good morning, Maurice. Today's class, we are now starting with the most important part of our subject, which is our part B, which is computation of total income. Yes, in yesterday's class, we already discussed. In yesterday's class, we already discussed what happens when you do taxation of salaries and what happens when you do taxation of HP. Yes, I told you these two are not part of the syllabus, but we still have a small topic pending out of it, so we will cover those topics. As we go to double taxation relief, those will automatically get covered for you once again, so you just have to keep the notes around it. We are now starting with the most important topic of the subject called as Pgbp. Yes, we are starting with Pgbp. Now, before I get into the subject, let's do a background check also. There is generally a format which I follow in every chapter which I have of a total income. Okay, there are two things which will mandatorily be there in my book. One is the charging section, one is the format. Okay, I told you in the past also, if you follow my formats, things will go perfectly well. So you have to follow the formats as it is. Yeah, so we have two things, one is charging section, one is the format. The first charging section will come and then the format will take place. Okay. Yep. So what we're going to do is we're going to read this chapter called as Pgbp. Let's read the heading first. Let's read the heading first. The heading says it's profits and business, profits and gains of business or profession. Notice the and the or. Notice the and the or. There is the and in between and profits and gains, and there is an or in between business or profession. Yes, the difference of this and or is very important. It's very important. Please understand, it's not profit or gains. Okay, it is not that either of them is taxable, it is that both are taxable. It is that both are taxable, and it is not business and profession, it is business or profession, which means under Income Tax Act, we always consider these two things are different. We consider these two things are different, while the provisions may more likely be same. The provisions may more likely be same. When it comes to the administrative part of it, the provisions automatically change. Okay, so there they look at business separately, there they look at profession separately. So it's business or profession. In case you have both business or and profession, you will split both and check. You will split both and check. For a simple example, if you are into teaching, and you're also having a CA firm, the CA firm is profession and a teaching is business. So that will be looked at separately, profession will be looked at separately, have an independent analysis. Have an independent analysis. That is what the chapter says. It's what? Profits. It is profits and gains of business or profession. It's profits and gains of business or profession. Clear? Yes. Like I told you, every chapter for me starts with the charging section. This chapter starts with the charging section of section 28. It starts with the charging section of section 28, where it comes and defines what is Pgbp. Generally, any charging section which I have will normally have a detailed line. We normally have a detailed line saying what and all is included in this head of income. Okay, but Pgbp is one exception to it, where Pgbp they don't come and say what is the definition of Pgbp. In this chapter, what they do is they give you an inclusive definition. They give you what? Inclusive definition, where they've come and told there are certain items in my mind, these items will become Pgbp automatically. There are certain items in my mind which items will become Pgbp automatically. Yes, if you notice, the first thing itself they come and start is what is the income chargeable under the head Pgbp? Income chargeable under the Pgbp is Pgbp. Yes, so they start itself with coming and saying what is the income chargeable under Pgbp? It is profits and gains of any business or profession which is carried on at any time during the previous year. That is what the starting point itself. Yes, what is Pgbp? Pgbp, simple. Yes, now which means we need to first try to understand what they mean by Pgbp. Yes, so let's break down the English first. The first word is profits. The second word is gains. Yes, you have the first word as profits, the second word is gains. Do you know what is the difference between the word profit and gain? Anyone? Any idea what is the difference between the word profits and gains? Are they both the same word? Are they both the same word? Answer is no. Profits generally is referred to revenue items, which means recurring nature items. Gains generally refer to capital items. Which means one-time activities. So in this section, we are trying to cover any kind of profits and gains, which means whether it is revenue also it is taxable, whether it is capital also it is taxable, as long as it is in relation to a business or a profession. So this chapter comes and says whether you have a revenue item or you have a capital item, as long as it is relating to the business, it is taxable under the head Pgbp. Yes, so profits and gains. Next to you two have word called as business and profession. You have two words called as business and profession. Let's start with the first one. First word is called as business. Any idea what is a business? Any idea what do you mean by business? Any idea? Yes, I'll ask you questions. Tell me whether it is business or not. Okay. Question number 1. You have gone and found a tree. On the tree land var the sap. Using the sap, you converted and made a paper. Is it business? Not a business. Business. Okay. You are sitting at home. Someone comes to you and comes and says, I have a very good proposal. I am planning to buy 100 pens at 1 rupee each. I'm planning to buy 100 pens at 1 rupee each. I'll give you this 100 pens. You sell it in the market for 3 rupees. You sell it in the market for 3 rupees. Make 2 rupees profit. Make 2 rupees profit. Business, not business. Business. Scenario number 3. You're sitting at home and someone comes and says, file my return and give. File my return and give. You come and say, okay, no problem. Filing return and all is not a big activity. I will do it for you as long as you pay me 10,000 rupees. As long as you pay me 10,000 rupees. He gives you 10,000 rupees, you file a return. Business, not a business. How is it a profession?
Technical
Filing return, huh? Have you filed a return in your office, Ritanya? Okay. What technical expertise did you require for filing the return?
okay, filing it doesn't require, but computation.
I didn't ask you for computation.
Okay.
Filing return, business, not business. Business. Okay. You are sitting at home. One person suddenly comes and says, I'm having a very good proposal. I'm planning to open a small firm where I will be able to service people. I need some people to work for me. Come and join me. I will pay you 10,000 per month. Business, not a business. You come and join me, I'll pay you 10,000 per month. Whether I work or you work, it doesn't matter. 10,000 per month I will give you. You come and join me, I will handle the work. I'm getting 10,000 per month. Business, not business. So we discussed 4 things. Scenario number 1, you converted SAP into paper. Scenario number 2, you came and said you got some Reynolds pen. You took the Reynolds pen for 1 rupees. You sold it for 3 rupees. Scenario number 3, I came and said someone came and asked you to file the return. You filed the return. Scenario number 4, I'm saying someone has come to you, said that you work for me. I will give you 10,000 rupees. 1 is business. 2 is also business. 3 is business. 4 is not a business. Why, Rahul? 4 is not a business? Because are you working for yourself or working for someone else? You're working for someone else, which means you are a employee. You are an employee. Rahul, what is the difference between the first 3 items and the 4th item? What is the difference between the first 3 items and the 4th item? You are the head, okay? Okay. So you are employing people and you are carrying out activities, makes it a business. Okay, question 2. You are working in a company. The company has various departments. One is an HR department, one is a production department, this department, that department. HR has 5 people. Those 5 people are responsible for bringing people into the company. Is HR the business owner or is the HR the employee? He is the employee. So is recruitment a criteria? Is recruitment a criteria? Just because I recruit people, does it mean that I am running a business? Then you will invest. Okay. Understand, business happens basis the risk of work. Look at the first 3 examples. The first example I came and told you that you are converting your SAP into paper. Okay. It can go 2 ways. One is that you perfectly use the SAP, you perfectly make a paper, everything is going well, you make a profit. Scenario number 2, you're trying to put it in the machine did not work, SAP got wasted. Is there a risk? Not a risk. risk. Second, you got some Reynolds pen, 100 rupees, 100 pens you got, 1 rupee each, 3 rupees you're planning to sell. If you're able to sell for 3 rupees, great. You tried to sell in the market, you found out that people have stopped using Reynolds pen. Risk there, not there. There. Third scenario, you are trying to file the return. Okay, you were trying to file return is not filing, portal is not working, return did not file on time, due date extended, agla. Okay, due date is also not extended, the return is not filed. Do you think the person will pay you money? Not pay money. Not pay money. Risk is there, not there. There. Scenario number 4, you are working for someone else is ready to pay you 10,000 rupees. If that business incurs losses, do you think they'll not pay you salary, or they will still pay you salary? They'll still pay me salary, which means whether the business is doing well or not, I am getting my salary. Is there a risk? Is there a risk? The only risk which you carry is that you may be thrown out of the company if you don't work, but that's not a risk of the business. You are getting no risk scenario because you will get your money regardless of what happens to the business. Yes or no? So is it a business then? No. Understand the difference between a business and anything else is the risk which you carry. Is the risk which you carry. You end up in a risky scenario, it is called as a business. Okay, where the chances of you may losing or you may gaining is equally high. No one can come and promise that I'll get 100% profits. No one can come and promise that I will always make losses. You may get profits, you may make losses. This is what we call as adventure. Which means we don't know. So uncertainty is very high. Yes, business in a simple word is an adventure which you take. Where things may go good to you also, things may go bad to you also. So what is a business? Business is basically undertaking an adventure in the nature of 3 things. Either you can do trade. Trade means I will buy and I will sell. Or you can do commerce, which means there is no products, I am just doing a service. Or it can be manufacture, which means I have something, I am converting into something. Yes. So 3 things you can do. If you do these 3 things with a risk, it is called as business. Yes. Let's read the definition. It says business includes any trade. Commerce or manufacture or any adventure or any concern in the nature of trade, commerce or manufacture, which means you should have 3 things happening. Either it should be a trade, it should be a commerce, or it should be a manufacture, but that is alone not enough. You should also have an adventure against it. In a simple example, no, think about it. You are working in a company as an employee. Employer comes and says that you are working in my company as an employee, go outside and sell 100 tickets and come. Now, are you into trade? Yes, you are into trade because you have got tickets, you have to sell it. But tomorrow if the tickets does not get sold, do you think you will not get your salary? You will still get your salary because your job was to sell the tickets. Whether the tickets get sold or not is his responsibility. My responsibility is only to sell the tickets. Yes, I will try my level best. Aachana great, aglana I don't care because my salary is final, which means am I carrying any loss or is the owner carrying the loss? Owner is carrying the loss, which means for me is it a business? No, for him it is a business. I am an employee. Yes or no? Yes. So that is what business is talked about. What is profession, Rahul? What do you mean by profession? Question. I am entering a singing competition. I won the singing competition. I am at the first place. Now contracts are coming to me. Everyone is coming and saying, "Inimala nanda next Arjit Singh." Okay, yenna song indalo nanda pesna. Okay, so I am the next Arjit Singh. Tomorrow Arjit Singh is also not doing any job. I am only doing all the songs. Am I into profession or am I into business? Profession. Okay. I am a world-class renowned athlete player. Okay. Olympics lela poi aatruken. I am a world-class Olympics player. I am getting paid per hour basis for the stunts which I show in Olympics. Business, profession. I am a BCom qualified. I have absolutely no knowledge about anything, but still I know how to file a GST return. People are coming to me and asking me to help them file a GST return. I am filing them a GST return. I am earning 5,000 per month. Business, profession, none of the above. Profession. I am CA qualified. Okay, rank holder number 1. But I have a family business which is into steel. Okay, and the steel business is doing 4 crores revenue every year. So I decided to quit CA. Qualified CA, I am handling the business. I'm the CEO of that steel business. CEO, basically I am the owner of that steel business. I have quit my CA job and I am right now doing the steel business of my dad. Business or profession? Business. Think about it. 4 examples I gave you. 3 examples became business. 4th example became non-business. I'm sorry, 3 examples became profession. 4th example became business. With the difference that in the first 3 examples, you may not have had a good qualification also. You may not have had a good qualification also, but still you are getting a profession title. Still you're getting a profession title. In 4th, you are having a good title. You're having a good title, but you are not doing anything relevant relating to the title, and so you are being called a business. Yes or no? Yes. Profession in income tax is not defined. Profession in income tax is not defined. Income tax simply comes and says, I have certain professions in mind. I have certain professions in mind. If there are people who do these profession, they are called as professionals. If there are people who do this profession, they are called professional people. So understand, your qualification is not the criteria for me to call you a professional. Your work is the qualification of a work is the criteria for me to call it a profession. If income tax comes and says profession includes vocation, profession includes vocation. Vocation means extracurricular activities like singing, dancing, music, and all those things. So which means I don't have to be a professional music player. But if I'm earning my money from profession of music, I will be called as a professional. I'll be called as a professional. I don't need to have a skill set qualification. Yes, I don't have to really go to a music academy, learn music and everything. As long as I am earning money from music, I will be called as a professional. I'll be called as a professional. At the same time, no matter how high qualification I have, if I'm not even doing CA job, does it mean that I'll be a professional? No, I will end up in a business. I'll end up in a business. So income tax defines a certain profession, and it also clarifies that it will be a profession only if you are carrying out that profession. Only if you are carrying out that profession. For example, income tax comes and says professional includes artist, singer, dancer, film writer, producer, director, accountant, lawyer, engineers, doctors, nurses, and all those people who are providing services in the nature of their profession. For providing services in the nature of their profession, then they are called professionals. Then they are called professionals. Yes or no? Yes. Definition of professional we will learn as we end the chapter, but right now this is what the modules. Yes. So what is a business, Rahul? Business is something where you take a risk. Profession is something where you deliver a specific skill set. Specific skill set, you don't have to be qualified for it. You just have to deliver that skill set. You just have to deliver that skill set. That is what the section comes and says. If you are earning any kinds of recurring profits or any kind of one-time gains from any of your risky business or any of your professional expertise carried on at any time during the previous year, it will be taxable under the head Pgbp. It will be taxable under the head Pgbp. Yes or no? Yes or no? Yes. Let me ask you a question. Rahul, I am a partner. What am I? I am a partner. I have a firm. I am a partner. I have a firm. Yes. Firm is giving me something called as interest on loan. The loan I gave to a partner. Yes. Interest on capital. I have contributed capital. Firm is paying me interest. Salary, bonus, share of profit. Share of profit. 5 items. What? Interest on loan, interest on salaries, interest on capital, bonus, bonus, salary, share of profit. 5 items I am getting from the firm. Who am I? I am the partner. Yes. Rahul, which of these items is taxable under the head Pgbp? Which of these items are taxable under the head Pgbp? First of all, easy thing, share of profit, taxable, not taxable? Under the head Pgbp. Yes, it is a part of Pgbp because I am earning profits from the firm. So it is under Pgbp. Now the question is it taxable or not? It is not taxable. Income tax specifically gives you an exemption. Income tax specifically gives you an exemption, separate story, separate story. As of now, PGBP is covering share of profit, no doubts. Okay, next IOL, interest on loan. Will it be taxable under that PGBP or IFRS? You getting interest on loan, PGBP, IFRS? Huh? Interest on capital, PGBP or IFRS? PGBP. Salary, salary या PGBP या? Salary. Bonus, salary या PGBP या? Salary. Ask a question to you, Rahul. While salary is not there a part of final, okay, let me give you the charging section of section 15. Charging section of section 15. Charging section of salary comes and says items which will be taxable under the head salaries are those items which are received by a person owing to an employer-employee relationship. Owing to a employer-employee relationship, which means two criteria. I should have an employer-employee relationship. I should receive salary in connection to that relationship. I should receive a salary in connection to the relationship. Who is receiving the salary? Who is giving the salary? Is firm an employer for a partner? For a firm, who is the owner? Partner is the owner. Is firm and partner same people or different people? Same people. So can partner come and say, I am paying salary to myself? No. Which means firm giving salary to partner. Is there an employer-employee relationship? No. If there is no employer-employee relationship, will salaries apply? No. Can salaries apply? No. HP cannot apply. Capital gains also cannot apply, which means left off is PGBP and IFRS. PGBP and IFRS. I told you IFRS generally something is only taxable if it is not covered in other heads. If it is not covered in other heads. Tell me, this salary which you are receiving from the partnership, the salary which you are receiving from partnership, you are receiving it because you are a partner or because you are working in that firm? You are a partner, yes, which means if I had not given you salary, I would have given a share of profit. At the end of the day, they both are business. They both are business, which means this should be taxable under the head. So salaries will be taxable under the head. Bonus will be taxable under the head. Interest on loan is coming to you because you are giving it generally or because you are giving it on account of your partnership. Interest is being granted because you have a deed with the partnership firm or it's because you generally want to give it. Which means everything is authorized in the business. Everything is authorized in the business, which means this also should be taxable under the head. IOC will also be taxable under the head. In simple words, anything which a partner receives from a firm will be taxable under the head PGBP, subject to exemptions. Subject to exemptions. Yes or no? Yes. Keep this in mind. Keep this in mind. It is not necessary that just because I use fancy words like salary and all, it will become taxable under the head salaries. It may also become taxable under the head PGBP. Yes or no? Yes. Question. Rahul, I am a part of the parliament. I am a part of the parliament. I am basically a chief minister. I am basically a chief minister. Parliament is going to give me something called as salary. Yes, no. Parliament will give me something called as salary. This salary is taxable for CM under the head salary PGBP IFRS. First of all, is it salary? No, why? The employer in this case is parliament, and parliament can never be an employer because government is for the people, of the people, by the people. In simple words, CM, we cannot go to the CM and come and say, dear CM, I have employed you, you are my servant, come and wash my home. Okay, CM will not come to your home and all. Yes, so just because your CM is there does not mean that we are the government for the CM and tomorrow I can call Narendra Modi to my home and come and say have a cup of coffee with me. Doesn't work out. Doesn't work out. They are not having an employer-employee relationship, which means salaries will not come. Left off with PGBP and IFRS. Question to you. The salary which is paid to CM, the salary which is paid to CM is because you want him to earn profits or because you want him to do good job for India? The salary which is received by the chief minister is because of his intention to earn profits or because of his intention to give welfare to the society? which means when he was planning to receive salary, was he receiving salary because he wanted to grow his business, or was he wanting to do welfare for the society? Which means it cannot be taxable under the head, can only be taxable under the head. Yes. Now, when I am telling that he wanted to do it for welfare, I am telling ideally. Okay, practically different story. Okay, I am not doing practical income tax here. Book knowledge la it is IFOS, because intention is CM will not try to earn profits. CM will try to service society. CM will try to service society. Practically, it is different. You and I both know. You and I both know. While we may come and say CM does not want to earn profit, we both know what CM wants to do. Okay, so we don't want to comment on that. Practically, things are different. Theoretically, it is IFOS. Theoretically, it is IFOS. Ideally, he should not earn any profits, but whether he earns or not is what we don't know. Okay, so for me, it is IFOS. For me, it is IFOS. Yes or no? Yes or no? Yes. Any doubts? No? Check. I told you the first item is a charging section inclusive definition with the profits and gains carried on any time during the previous year. After first item, every other item is a including deeming provision. Including deeming provision, where income tax comes and says these items may not have been PGBP, but I am clarifying to you that it is PGBP. These items may not have been PGBP, but I am clarifying to you it is PGBP. Let's read one by one. No? Let's read one by one. It says compensation or any other payment which is due or received at or in connection of termination or modification of terms and contracts of any person for managing the affairs of any company or agency in India or government establishment, or for any contract relating to business, or for any contract relating to business. Let's read it slowly. It says you have received any kind of compensation which is relating to a termination or modification of any contract of a business. Of any contract of a business. I'll give you one example. Let's say, for example, I and you enter into a contract of business. The contract of business basically comes and says that you have to give me 1,000 raw materials every single day. You have to give me 1,000 raw materials every single day, fixed order every single day. To my office, 1,000 raw materials should come. 1,000 raw materials should come. In exchange of that, I will pay you 1 rupee per raw material. Yes or no? Yes. In the agreement, it also comes and says that if at all you at any single day fail to give me the raw materials, I will compensate you for an additional 5 rupees. Which means if you give me 1,000 raw materials, I pay you 1,000 rupees. The day you don't give me 1,000 raw materials, I will ask you to pay 5 rupees compensation. Because you did not honor the contract. Now, this person, for 1 full month, he was doing it properly. Next month, what happened? Machinery stopped working. So he was not able to deliver the product. Now, every single day, he is ending up losing 5 rupees. So he went to this person and came and said, dear sir, I think this clause is hitting me very bad. Let's do one thing, sir. I may not be able to help you with 1,000 raw materials. Let's make it 100. My machinery can support you for 100. It cannot support you for 1,000. 1,000 Kamala, if I am able to produce, I will give it to you. But if it's not able to produce 100 Kamala, if I am able to produce, I'll give it to you. But up to 100, I will guarantee I'll give it to you. I wanted how many? 1,000. He is ready to give me now 100. Will my business work? Not work. My business will take a hit because my business wants 1,000 raw materials every single day. Yes or no? So I went to him and I came and said, okay, if you think that you want this clause to change only for 100 raw materials, I'm fine with it. But you are trying to modify the contract and I'm going to take a loss. So for whatever loss I'm going to take, 50% you will bear, 50% I will bear. 50% you will bear and 50% I will bear. He is telling, okay, no problem, sir. Somehow I am saving myself. So I will bear 50% of your loss. Because he gave me only 100 raw materials every single day. This month I incurred a loss of 1 crore. I went to him, I showed him the bill, I told him I have incurred a loss of 1 crore. Last year I did 2 crores business. This year I have only done 1 crore business, which means 1 crore loss I have done. 50 lakhs you bear, 50 lakhs I will bear. 50 lakhs you bear and 50 lakhs I will bear. I went to him, I collected 50 lakhs. This is a compensation for me. Yes or no? Revenue compensation or capital compensation? Revenue or capital? Think and tell me carefully. Do you think this compensation is happening only once, or next month also when there is loss of business I will collect from him? I'll collect next month also, obviously, because I am going to incur this loss next month also. Every month he's going to give me only 100, which means recurring or non-recurring? Capital revenue item. Yes, income tax comes and says that boss, this is a revenue item, will be taxable under the head Pgbp, will be taxable under the head Pgbp, because it is a compensation which is received by you for modifying the contract, Yes, I'll change the example. Let's say, for example, you are into agency business. You are running an agency business with Reliance. Reliance was paying you 5% of the profits which you made every year. 5% of the profits which he made from you every year, he was paying you money. This was your agency model. What happened is Reliance tomorrow came and said, I don't want to work with you anymore because I have a better agent. He's only asking me 4%. You're asking me 5%. So I don't want to work with you anymore. Okay, so he wants to shut down the contract. I told him that, sir, in the contract there is a clause given that you have to work with me for at least 5 years. It is only third year right now, sir. 2 more years you have to work with me. Reliance comes and says, no, I don't want to work with you. I want to work with the other guy because he's only asking 4%. I said, sir, if you don't want to work with me for the next 2 years compensation, you have to give me 1 crore rupees today. For the next 2 years, because I'm going to lose business out of you, you have to give me 1 crore compensation today. Reliance said, no problem, boss. 1 crore giving to you is better than the commission which I'll give you tomorrow. So Reliance gave me 1 crore of commission, 1 crore of termination fee. This 1 crore rupees is capital revenue. Is the 1 crore capital or revenue? It's a capital. Taxable, not taxable? Taxable. Why? Because it is a compensation received which is capital in nature for the termination of a contract which is relating to your business. In simple words, whenever there is a business activity happening, whether it is capital or revenue, it will become taxable. Yes or no? Yes. Can we go forward? Yes. The next items which are there in the book are purely your IDT items. Look at it. No, it says profit on sale of import entitlement license. Which means any kind of license which you have got for importing products, you can sell this import license to someone else, you will get a profit out of it. That profit is also taxable. This is an indirect tax item. Next item. Cash assistance or duty drawback received or receivable against exports made. Cash assistance or duty drawback which is received or receivable against exports made. So you have got a duty drawback under customs. Again, whatever duty drawback you got will become taxable. Next, profit on transfer of duty entitlement passbook scheme or duty free replenishment certificate. Duty entitlement. So they have given you a passbook in which they are coming and saying, if at all you import products, whatever duty you have to pay, you can get it back. You have decided to transfer this duty entitlement to someone else so that someone else can get the money back. You get a profit against it. That will also become taxable. Yes. Next is the item which we learned. Any interest, salary, bonus, commission or remuneration which is due or received by a partner from its partnership firm. Any what? Interest, salary, bonus, commission or remuneration which is received by a partner from a partnership firm. Next. It says any sum paid under an agreement for not carrying out any kind of business or profession. We call it as non-compete fee. Or for not sharing any know-how, patents, copyrights, trademarks, license, franchise or any other business or commercial rights of similar nature. What is this, Rahul? Let me take a simple example. Assuming you are the chef of McD. You are the what? Chef of McD. Now, when you were the chef of McD, you would have been given the secret recipe by which the burger of McD is made. Yes or no? Yes. Tomorrow what happened is you have been working in McD for 10 years. Now you have decided to open your own business. When you decided to open your own business, you have decided to open a burger business once again. McD will have a worry with you. What is a worry? McD will come and say, you already know my secret recipe. Tomorrow if you open your separate business, it will become a problem for me because you will take over my recipe and you will use it in your business. Do you think McD will agree to it? No. Generally what happens is all these kind of agreements have a non-compete clause. Where they come and say, if you are entering my business and I share you the secret recipes, in the future if you decide to leave my business, you are not permitted to open the same business. same business. If that person would have come and decided, no, I want to stop burger, I want to do a pizza business, they would have allowed. They would have allowed, because McD does not sell pizzas. They only sell burgers. Yes or no? So McD would have said, no problem, you can continue with pizza business, but I will not let you do burger business. You should not take over my recipe. You should not take over my recipe. This person is coming and saying, no, sir, I want to do burger business. I want to do burger business. McD comes and says, see, I will do one thing. I will give you 50 lakh rupees for you to not do the business. For you to not do the business, find something else. Find something else. Here is 50 lakhs for you. Here is 50 lakhs for you. This 50 lakhs is called as non-compete fee. This 50 lakhs is called as non-compete fee. If this non-compete fee is found to be revenue in nature, it will become taxable under Pgbp. It will become taxable under Pgbp. Yes or no? Yes or no? That is what is given. That is what is given. Clear? Clear? Next item. Any amount received under a keyman insurance policy. What policy? Keyman insurance policy. Rahul, what is keyman insurance policy? Basically, what is happening is you are working in my company. You are working in my company. You are the director of my company. Okay. And because of you only my company is running. Because of you only my company is running. An example could be Mukesh Ambani for Reliance. Mukesh Ambani for Reliance. Now, if Mukesh Ambani decides to retire, do you think Reliance shares will fall or not fall? Reliance shares will fall, because everyone is trusting Mukesh Ambani for Reliance. Yes, tomorrow if Mukesh Ambani decides that I want to quit Reliance and my sons will take over, Reliance shares will fall. Yes or no? That is why we have a policy called as keyman insurance policy, where this policy comes and says that if at all the company has a certain keyman, and the keyman decides to leave and go, or the keyman dies, the business may take a loss. Insurance company will compensate you for that loss. Now the question is, business is making a decision to hire a keyman insurance. Premium will be paid by business or partner. Will the director make the premium payment or the business will make the premium payment? Who is taking the insurance? Business. Why is the business taking the insurance? Because they want to ensure that the keyman does not leave. So who will pay the premium? Business will pay the premium. Tomorrow the keyman left and went. Insurance gave money. Will they give the money to the keyman or will they give the money to me? Will keyman receive the money for leaving the company or will the business receive the money for leaving the company? The business will receive the money. So it should be taxable under the head Pgbp, because premium was claimed as a deduction under Pgbp. Income should also be taxable under the head Pgbp. This is what the provision comes and says. Yes, so any amount which is received by the business under a keyman insurance policy, because you paid the premium of it, will also be taxable under the head Pgbp. Yes or no? Next. FMV of an inventory as on the date of conversion into capital asset. In the right side, put it as refer capital gains. In the right side, put it as refer capital gains. We will discuss when we do to capital gains. So the question is, an government employee is receiving a gratuity after retiring from the employment. Is it taxable under the head salaries or IFRS? Ask yourself a simple question. Why are you getting that gratuity? Because you worked in the company or because the company is very nice to you? Which means, instead of me giving you gratuity after employment, I could have also given you the money during your good work. Possible? Yes. If you were doing good work for 5 years, I could have come and told that yes, you are doing a good work. I could have given you that money that time itself. Instead of giving you the money that time, what am I doing? I am giving the money after 5 years as gratuity. Yes. Technically, this money pertains to that after employment or during your employment. The money is pertaining to the services you provided during your employment or after employment. Pertaining to services during employment, which means this money is due to your employer-employee relationship and is received because of your relationship, which means it should be taxable under the head. We call it as profit in lieu of salaries. It is there in section 17, which comes and says when you receive any money after employment which is pertaining to the employment, that is still taxable under the head salaries. Yes. The only money which will go into IFOS is those kind of money which is not received because of your employment. Okay, simple example would be you are getting married. You are getting married. Company friends in the company have made a decision that because you're getting married, we will give you some gift. We will give you some gift. Is it taxable under salaries? No. Why? Because there is no employer-employee relationship. There is no employer-employee relationship. Assuming your manager comes and gives you that gift, is it taxable under salaries? Still no. Still no. Because even though there is an employer-employee relationship, the payment is not made because of that relationship. The payment is made because of your personal relationship. So therefore also it's not there. Assume company has a policy. Assume company has a policy. The policy comes and says that whenever some of my employees get married, company will sponsor 50% of your marriage fee. Company will sponsor 50% of your marriage fee. Now that is salary, not salary. That is salary because there is a relationship, and because of a relationship, I am giving you 50%. So that will become salaries. Otherwise, it is not salaries. Clear? Yes. Can we go for next? Any amount received? Yes, ma'am.
So, 9 point, you say that it's not complete in the nature of revenue. What is
The
the other example?
other example would be a scenario where you are basically coming and saying that I have a know-how product. I have a know-how product. Let's say, for example, I have McD or a secret recipe. Okay. I decide to give the secret recipe to someone else. Tomorrow he is going to become the owner, which means I am transferring my intangible asset. Yes or no? If I transfer my intangible asset, will you receive the intangible asset money anywhere in the future anymore? Or will he receive the money anymore? If he is going to receive the money anymore, for you, this is a capital profit. Yes or no? So should be taxable under Pgbp or capital gains? That's what the idea is. Yeah.
And this non-complete generally it will be recurring features.
No. You make a one-time decision. Okay. When the other person is going to start on a clause, you will come and put a one non-compete fee. It can be working two ways. It can be working two ways. One way is where the company will come and say, I will give you money so that you don't work. The other way will come and says, I am telling you don't work. If in case you work, then I will ask you compensation because you violated the contract.
But still it is considered to be revenue in nature.
It is never revenue. It is always capital.
Exceptions, we say that income chargeable and capital gains should not be taxed.
That's what. So it is capital in nature, ma'am. But understand, in the first scenario, you are getting a capital receipt without any corresponding transfer of asset. Right? Notice the example which I told you. I am telling you that I am working in a firm. I am working in McD. I decided to quit McD and join another company and make my own startup. Okay. After I am starting my own startup, the company is paying me some compensation for me to not do that business. Have I transferred any asset against it? Which means it should be taxable under the head. If I had transferred an asset, basically I have the McD recipe. I gave him the McD recipe and I told him, here the McD recipe going forward. In that case, there is a transfer of rights. In which case it will be taxable under the head. That's what the idea is. Clear? Yes. Last item is saying any amount received on demolition, deconstruction, discarding or transfer of capital asset which has been claimed as deduction under 35AD. When we do 35AD, that time we will discuss. Okay, right now not relevant. If you notice in the middle I dropped some things. Point number 3. Point number 3, it comes and says income derived by trade, professional or similar association from specified services performed for its members. We will discuss this in a chapter called as taxation of other persons. We will discuss this in a chapter called as taxation of other persons. I have already given you a background on this when we did rates of taxes. In rates of taxes, when we were doing cooperative society, if you remember, I came and told you cooperative society generally will not be taxable for the money which is received from its members because it's a benefit to itself. But if the cooperative society ends up doing profit scenarios where it is charging more money from revenue, more revenue from members, or it is charging money to outside people, in that case it will be taxable. That is what they are telling. So any kind of income derived by a trade, professional or similar association from specific services performed for its members. So you have performed some specific service for its members for which you are deriving money against it. Income tax is saying it is taxable because now there is no money given to itself. You are trying to earn profits from a separate person. We will discuss this again in length when we go to taxation of other persons. Clear? Last item is your amendment for the current year. Which is point number 7. Read it with me. It says any kind of benefit or perquisite which is arising from a business or profession whether convertible into money or not, or in cash or in kind, or partly in cash or partly in kind, partly in cash or partly in kind. Yes, this is what the definition says. What does the definition say? Any kind of benefits or perquisites which is given on account of a business, whether it is given in money, or it is given in cash, or it is given in kind, or it is partly in cash, partly in kind, partly in money, it doesn't matter. It is a taxable item. It is a taxable item. Take out your amendment pens from the whether part to the kind part. From the whether part to the kind part, please highlight it off. Please highlight it off. Let me tell you why the amendment. Highlight it off quickly. Let me tell you why the amendment. Shall we? Yes. What is the chapter called as? Profits and gains of business or profession. Very good. Yes. What are we discussing? We are discussing about anything called as benefit and perquisites relating to a business. Benefits or perquisites relating to a business, where I came and told you it is taxable whether or not it is in convertible cases, or whether it is received in cash, or received in kind, or received in partly cash, partly kind. Rahul, now understand, if you notice, I have only put the amendment from whether to the kind. From whether to the kind, I have not put an amendment to the business benefits or perquisites, which means business benefits and perquisites were always there. Business benefits and perquisites were always there. What is an amendment is the whether convertible part. Whether convertible part. Rahul, what is the issue? What is the issue? I'll tell you the issue. Basically, what happened is there was a company. The company name was Mahindra. I hope you have heard about it. Have you heard about this company? Yes, a company called Mahindra. A beautiful tax structuring which Mahindra did in order to avoid taxes in India. What happened is Mahindra had a subsidiary. What did Mahindra have? A subsidiary. Let's say subsidiary A. Now what happened is Mahindra had a subsidiary. And the issue which was happening is Mahindra was making losses. Whereas subsidiary was making profits. No, actually ulta. Subsidiary was making losses, Mahindra was making profits. Yes. Now the problem what happened is when Mahindra is making profits, Mahindra has to pay tax. Subsidiary making losses will carry forward the losses, and the losses of subsidiary were getting wasted. So what happened is Mahindra entered into a decision where Mahindra came and said, dear subsidiary, I will take from you assets. Yes, Mahindra is planning to take assets from subsidiary. Why is Mahindra taking assets? Because on this assets, Mahindra will get depreciation. Yes or no? If Mahindra is getting depreciation on these assets, will his profit come down or his profit increase? His profit will come down. Yes. So what Mahindra did is Mahindra went to its subsidiary and came and said, dear subsidiary, I want you to sell me your assets. Hypothetically, let's assume Mahindra is planning to sell the assets, planning to buy the assets for a price of 1 crore. Separately, what Mahindra did is Mahindra said, dear subsidiary, you give me the asset, I have to pay you 1 crore. Unfortunately, the problem is I don't even have money to pay you 1 crore also. Because I am loss making. Because I don't have money. So what it went is it told subsidiary, do one thing, you also give me a loan. What do? You also give me a loan. So now subsidiary has given 2 items. One item is asset, second item is loan. So what happened is Mahindra also took a loan from subsidiary. What did Mahindra do with this loan? It paid back the money for the asset. Yes or no? So indirectly what happened? Mahindra took a loan and immediately used the loan for repaying the asset. Yes or no? Yes. So technically meaning money has gone to Mahindra, money has come back from Mahindra, which means transaction is basically zero. In the transaction you sell, yes or no? But what has happened? You have now come and told that you have got this money for buying an asset. Yes. So right now in your books, what is showing? In your books, is loan showing outstanding or is an asset showing outstanding? Asset is loan is showing outstanding. Understand my entries. What is the entry? First of all, you're going to get asset from your subsidiary. You're going to get an asset from a subsidiary. Entry which you will pass is asset account debit to subsidiary account. Yes, you will recognize the creditor. You will recognize the creditor. Then you also took a loan from subsidiary. Entry is bank account debit to subsidiary. Yes or no? Yes. Now you are planning to repay the money to subsidiary. So entry is subsidiary account debit to bank. Yes or no? Now tell me carefully, have you repaid the money for the asset or have you repaid the money for the loan? You have repaid the money for the asset. You bought asset from him, you gave him back asset money. You gave him back asset money, which is what is outstanding right now. Loan is still outstanding right now. Yes or no? Yes or no? Now, Mahindra has a asset also. Mahindra has a loan outstanding also. What Mahindra started doing? Mahindra started claiming depreciation on the asset. Profit started coming down. Profit started coming down. Yes. Now, Mahindra has also taken a loan from subsidiary, which means Mahindra has to repay the loan. Yes or no? Yes, Mahindra has to repay the loan. What Mahindra decided with subsidiaries, it went to subsidiary and came and said, dear subsidiary, I don't want to pay back this money to you. I don't want to pay back this money to you. You waive it off for me. Do what? Waive it off for me. Yes. Subsidiary came and said, okay, boss, you are my parent. Whatever you say is final. Whatever you say is final. So it waived off the money. It waived off the money. What is the entry you will pass, ma? What is the entry you will pass? You will pass an entry called subsidiary account debit. Will you pay the loan anymore? No, you will not pay the loan anymore. So you pass an entry called subsidiary account debit to P&L account. Yes or no? Waive off loan. Waive off loan. So you pass an entry called subsidiary account debit to P&L account. Now tell me what has happened. Mahindra has an asset. Mahindra has an asset, 1 crore asset on which it is claiming depreciation at 10%. So every year now he is getting a depreciation of 10 lakhs. Yes or no? At the same time, what has happened is subsidiary gave loan, got back loan, which means subsidiary has paid 0 rupees. Subsidiary has paid 0 rupees from its pocket. From its pocket. The only thing which has happened is asset has moved from subsidiary to parent. Asset has moved from subsidiary to parent. Loan also has come back to subsidiary. Nothing else is pending. Nothing else is pending. The only one thing which is pending is subsidiary has taken a, Mahindra has taken a profit in the P&L. Mahindra has taken a profit in the P&L. Question to you, this waiver of loan is a capital profit or a revenue profit? The loan which is waived off by Mahindra and subsidiary, because of which Mahindra does not have to pay this money anymore, is a capital profit or a revenue profit? It's a capital profit. Will you keep doing this every year? No, you will not do it every year, which means it is a capital profit. And if you remember when I discussed basics of income tax, I told you revenue profit is always taxable. Capital profit needs to be defined in the law. Needs to be defined in the law. What happened is until last year, the provision used to come and say any benefits or perquisites, whether convertible into money or not, full stop. Whether convertible into money or not, full stop. What happened? Mahindra went to income tax department and came and said, dear sir, this profit which is there, no, which is showing in my P&L, this profit is a capital profit. I'm sorry, I don't want to pay tax on this. I don't want to pay tax on this. I will pay 0 tax to you for this thing, sir. I'm sorry, this is a capital profit. I don't want to pay a rupee tax. I don't want to pay a rupee tax. Assessing officer came and said, hey, how can you not pay tax? How can you not pay tax? You have earned this money. No, this money has come to you. You should have taken the loan. You should have repaid back the loan. You have not repaid back the loan, which means you have kept someone else's money. You have kept someone else's money, which means this should be a profit for you. I want to tax it. I want to tax it. He is saying not taxable. He is saying taxable. They both went to courts. They both went to courts. Supreme Court decision came. Supreme Court decision came. Supreme Court asked the assessing officer, dear assessing officer, the provision comes and says any benefit or money, whether convertible or not. Whether convertible or not. In this scenario, is this money a cash money or a kind money or nothing? It is nothing, because understand there is no cash. There is no cash. It is a waiver. It is a waiver. Is there a kind? No, nothing is there. Nothing is there. So income tax, Supreme Court came and said, boss, this money is not taxable. This money is not taxable. Now think about it. Now what has happened? Think about it. What has happened? Mahindra has ended up getting the asset for free. He's ended up getting the asset for free. He's claiming free depreciation also. Because of which Mahindra's profit has come down. Subsidiary's profit is increasing because subsidiary is now not claiming depreciation. And this money has also become non-taxable. Yes or no? A beautiful case law where High Supreme Court knows that Mahindra did a routing mechanism. But basis the law, they were not able to do anything. Noticing all that, this year the amendment was brought in where they came and said, any kind of benefit or perquisite coming to you, whether it is convertible or not doesn't matter, whether it is in cash doesn't matter, whether it is in kind doesn't matter, whether it is in both also doesn't matter, everything is taxable, which means going forward if someone does this transaction, will it become taxable or exempt? It will become taxable. So going forward, any waiver of principal loan is also taxable. Yes or no? Yes, that is why the amendment. Until last year in November 23, you will find this as a case law in your book itself. Mahindra and Mahindra was a case law notified in your book. Right now, since they have made it as an amendment, this is not there anymore. It is a taxable amount for you. Which means going forward under Income Tax Act, if someone decides to not repay back loans, even if it is capital or revenue, income tax will tax it off. Because that's what the law says. Yes or no? Understood the case law? Any doubts? No doubts? Going forward? Yes. This was your charging section of Pgbp. I am going to put out certain case laws to you. I'm going to ask you what the decision you think is right. And then we will deliberate on the case law. Okay? So I'm putting out some scenarios to you. Let me know what is happening. Illustration number 1. Yes, there is a company called as CP. Yes, this company in the business line is only into the business of letting out of properties. This is also given in the MOA. Okay, and the MOA object clause MOA of this company's object clause comes and says the business of the assessee will be to let out properties for a rent. This is what the business is. In the previous year, let's say 23-24. This person earned 200 crores from let out. And claimed expenses and everything. He claimed expenses of about 120 crores, assuming, ending up in a profit of 80 crores and paid tax on 80 crores. Clear till you? Yes. Assessing officer came to this person and came and said, Dear CP, you are letting out a house. And therefore this should be taxable under the head HP. So assessing officer is contending that the 200 crores which you received should be taxable under the head HP. And if you remember HP comes and says you can only claim 30% as a standard deduction. Therefore they allowed 30% deduction to you, ending up in a profit of 140 crores. CP comes and says, Dear sir, this is my business. So therefore this should be under Pgbp. Assessing officer says, no, this is house property let out and therefore it should be taxable under house property. They both are saying, sir, I am saying it is Pgbp because it is my business. Assessing officer saying it is in HP. Now the reason why assessing officer is saying HP is because the charging section of HP comes and says annual value of a property of which the assessee is the owner is taxable under that Pgbp. Annual value of the property of which the assessee is the owner is taxable under the head Pgbp, which means at no point of time does the charging section come and say it should be a business. Exception comes and says that any house used for the business of the assessee will be taxable under Pgbp. Any house used for the business of the assessee will be taxable under Pgbp. Assessing officer went to this person and came and said, Dear CP. I would have let it be in PGBP had you used it for your business. Had you used it for your business, you did not use this building for your business, you let it out to someone else. You let it out to someone else, so you have not covered in the exceptions. You are not covered in the exceptions. If you are not covered in the exceptions, you are covered in the charging section. Charging section says any property of which the assessee is the owner will be taxable under HP. So therefore, I want to tax it under HP 200 crores, 60% is 30% is the deduction. Therefore, I will tax 140 crores. You have only paid tax on 80 crores. Difference is 60 crores. On the 60 crores, I want tax along with penalty. Along with penalty, because you have paid lower tax. You have paid lower tax. Now, they both went to court. They both went to court. You are the judge of the court. You are the judge of the court. What is right, Rahul? 80 crores or 140 crores? What is right? 80 crores or 140 crores? Ritania?
So 8,
Why?
because this is his day-to-day business, normal course of business, he is carrying out this activity.
Okay. I am the assessing officer, Ritania. I am giving you some contentions. Tell me if my contentions are right. Okay. Contention number 1. Like I told you, exception of HP comes and says that unless you use the building for your business, it is taxable under the head HP. It is taxable under the head HP. According to you, am I using this building for business?
Yeah, to carry on the
Are you
business, but
are you using it for your business?
no.
No. So which means you are not covered in the exception. Which means you are covered in the charging section. Now you may come and say, Rahul, charging section is HP and charging section of PGBP. My predominant business is PGBP, day-to-day business is PGBP, therefore I want to put PGBP. I will ask you a second question. I will ask you a second question. HP or a charging section comes and says any rent of a house should be taxable under HP. PGBP chapter comes and says any profit from any business is taxable under PGBP. Which one looks more specific? If HP looks more specific, can I come and say that when there is a general law and there is a specific law, you should always follow specific law? Yes, no, I'm not telling it is right. I'm telling I'm the assessing officer. This is what my contention is. This is what my contention is. Yes, as a judge, in front of the judge, you are my judge. I'm telling you all these. I'm telling you all this just for me to convince you. Just for me to convince you. Now tell me, do you think HP is right or PGBP is right?
So, but business motive only.
What is business motive?
This selecting out and earning, this is business which he thought he'll carry.
Right. Okay. So as a judge, your question to me is, Rahul, this business motive is like that only, correct? Okay. Question to you, Ritania. I am a retired person. Okay. I am assessing officer. I am telling you, sir, assuming I was a retired person, 62 years, do you think I am earning anything? No. But I have a house in my name. I have a house in my name. So what I did is, anyway, I am a one-man show. I don't have any family or anything, but I am a retired person. For me to run my house, for me to run my house, or for me to earn something, for me to have my food and everything, what I decided is I went and I gave off my first floor to bachelors for rent. I gave off my first floor to bachelors for rent, and I'm coming and saying every month you pay me 10,000 rupees. This 10,000 rupees will help me eat for the day. Will help me eat for the day. What is my predominant income? What is my predominant income? Rent. Is it business income or HP income? Why? How, sir? For dear judge, for business you are coming and saying, in this scenario you are coming and saying it is a predominant business and therefore you want to tax it on a PGBP. But for an old age person you are coming and saying it is HP.
Person, he has just a portion of his house, and to meet his daily needs, he just lets it out. But
Why do you think you are doing business?
to meet
What is the difference? HP amma. HP. HP தானே சொன்ன நீ. Convinced? Have I convinced you that it is HP? Is assessing officer right or CP is right? Assessing officer is right. Gayatri says assessing officer is right. Rahul has convinced me perfectly well. Judge is happy. Yes.
But it should be under business.
I know it should be. You tell me why is the question. PGBP is the right answer. PGBP is the right answer. Understand, the miss out which you people did is the exception part. The miss out which you people did is the exception part. What I told you in exception, I told you, unless the property is used for the business of the assessee, it is taxable under the head HP. Yes. So which means if the asset is used for the business of the assessee, it is PGBP. If the asset is used for business of the assessee. Judge asked a simple question. According to you, assessing officer, what do you mean by assessee using it for his business? What do you mean by assessee using it for his business? Do you really want the assessee to every day come to that office and sit in that office? Is that what the request is? Are you requesting that the assessee should come to this office and sit in his office? Why can't you come and say that, boss, for his business, he is using this property and giving it to someone else? Then also it is my property, given it to someone else for my business purpose. For my business purpose. Have I satisfied the condition technically? Yes. There is no condition anywhere given to me that it is going to be used for my business only if I come and put my foot forward. Yes. Tomorrow if I don't clock in into the room, I don't go to the factory everyday basis, you cannot come and say it is not my business factory. It is still my business factory. There is no criteria given anywhere that I have to come and sit in that factory. Yes or no? Yes or no? Which means even if the property is given to someone else, it still does not matter. It is still my business asset given for my business. One cannot come and say that I have to be in that property. Then only it will become HP. That is not the criteria. Which means I have satisfied the condition of the exception. What is the exception? That using it for his business. Have I used it for my business? Yes. I may have not gone physically stayed in that building, but I have used it for my business for the purpose of letting out in my business. Which means have I satisfied that exception? Yes. Which means will it go to HP? No. It will come to PGBP. Ritanya, yes or no? Yes.
In the HP exception, that will be used for the businesses only if something like let out happens, we'll have some income and it can be taxable, right? We are itself using it.
That's a depreciation case. If you use your own building for your own office without letting it out to someone, it's a depreciation case, straightforward.
Okay, so that for the purpose of depreciation,
technically exception was covered for that only, because otherwise what would happen? HP has this DLOP nonsense, no? If you don't put it under PGBP, everything will start becoming DLOP for you. Okay, so that exception helps you with two things. For one thing is to help you with telling you that the asset will become taxable under that PGBP, so you can claim depreciation. Second is they are also coming and saying that if you have any corresponding income against it, you can also claim it under PGBP. I don't want to tax it under HP for you. Clear? Yes. What this court decision basically came and said is, any asset which is used for the letting out of business is also treated as a business asset because it is used during the course of the business. Since the business of the assessee is predominantly into letting out, he has satisfied that exception and therefore the income will be taxable under the head PGBP. The court came and said, for me to decide whether the business of the assessee is is let out or not, is for me to check his MOA. If the MOA of the person clearly comes and clarifies that he is into the business of letting out, I will let you tax it under the head PGBP. If the MOA does not clarify that he is in the business of letting out, I will assume that this is an ancillary business. Which means I will then tax it under the head HP. So the ground rules which the Supreme Court laid down is, you should have an MOA in place, and the MOA should clarify your nature of business. If the MOA clarifies your nature of business as being let out predominantly, then your income is taxable under the head Pgbp. If they say no, there is no MOA clarification, or even though MOA comes and says but your predominant income is coming from somewhere else, in that case this is not your main business, and therefore it will be taxable under the head HP. Therefore it will be taxable under the head HP. To the extent of whether it is considered under business or not, it will be considered in business because the asset is being used for business purpose. It is not necessary for me to physically be in the asset. It is not necessary for me to physically be in the asset. Rahul, what is CP? CP is basically Chennai properties. CP is basically Chennai properties. So this is a decision of Chennai properties. This is a decision of Chennai properties, as well as another decision called as Royapettah Corporation. Royapettah Corporation. These two decisions basically came and said that if you have any kind of house property which is being let out to as a part of your business operations, it will be taxable under the head Pgbp and will not be taxable under the head HP. Clear? Clear? Yes. Next. Illustration number 2. Illustration number 2. Yes, let's read the case law first. It says, where the main objective of the business is to hold properties and to earn income from letting out of these properties, then the entire income will be taxable under the head Pgbp and not under the head HP. Chennai Properties and Investments Limited versus CIT Supreme Court, or Royapettah Corporation Private Limited versus Assistant Commissioner CIT Supreme Court. Yes, I told you whenever you see a case law in blue box, these are your significant case laws. These will come as a separate question in exam. Where basically what will happen is they'll give you a case study. And they'll come and say the following case study you are required to answer it by giving the facts of the case, issue of the case, analysis of the case, and a conclusion of the case, along with any case law which is in mind. Rahul, do I have to mug up all the case law names and go? If possible, yes. If you are not able to do it also, Rahul, it's not a problem. You can choose to ignore it. You can come and say a similar decision like this was passed in a court. If you do remember the case law name, well and good. That's even better, because then you can show off. If you don't remember, don't quote a wrong name. That is your choice. Okay. At the end of the day, the wordings are important. Yes or no? Yes. Can we go forward? Yep. Illustration number 2. There is a person called A. Now what this A did is, A actually wanted to get a bank guarantee. What guarantee? So it went to the bank and it came and said, dear bank, one of my customers are asking me for a bank guarantee. They want to prove that I am insolvent. So you give me a bank guarantee which will come and tell the other person that in case of a default, you will pay money from my bank account. Generally, what will happen is when you approach a bank for a bank guarantee, bank will come and say, I am okay to give you a bank guarantee as long as you first give me that money to guarantee. Basically, what will happen? Assuming that I have a bank, ICICI. I have a bank called ICICI. If I go to the bank and come and say, dear bank, give me a 1 crore guarantee. What bank will come and say is, if I am going to give you a 1 crore guarantee, what I will do is, from the current account which you have, I will move 1 crore and move it to FD. Why am I moving 1 crore to FD, Rahul? Because bank wants to be safe. If he lets it go and keeps it in current account, what will happen? Tomorrow you will withdraw the whole current account money. And you will go to the customer and say, I will not pay you the money. At the end of the day, who will be held responsible? Bank will be held responsible. So what bank generally does is, when you go and ask for a guarantee money, bank will ask you to transfer that money into an FD. So what happened is, A Limited asked for a bank guarantee of 1 crore to ICICI Bank. ICICI Bank moved 1 crore money from current account to FD account. In exchange for giving what? a bank guarantee. In exchange for giving a bank guarantee. Yes or no? Yes or no? Now what happened is, this money which was deposited in FD, this money which was deposited in FD will earn interest, will not earn interest? Will earn interest. So what was happening is, it was earning interest at the rate of 6%. It was earning interest at the rate of 6%. For that year, assume the number came as 3,50,000. What is the number? 3,50,000. Assuming for that year the number came as 3,50,000. What happened is, Mr. A, while filing his return of income, came and said, my Pgbp income, normal Pgbp income, whatever number he had, let's say 20 crores. Let's say 20 crores. Next, add interest on bank guarantee FD. Interest on what? Bank guarantee FD, 3,50,000, and therefore in Pgbp showed 23,50,000. How much did he show? 23,50,000. This is what he filed a return with. This is what he filed a return with. Assessing officer came up and said, no, something is wrong, something is wrong. I am okay with your Pgbp being 20 lakhs. I am okay with your Pgbp being 20 lakhs. How the hell is interest on an FD Pgbp income? How is an interest on FD Pgbp income? That should have been IFOS. That should have been IFOS. So therefore, while your income will be 23,50,000, I am not denying it. While your income will be 23,50,000, I am not denying it. The 3,50,000 is not Pgbp income. That income is IFOS income. The income is IFOS income. If you think about and tell me, Rahul, 23,50,000 is the same on both the scenarios, which means tax is not going to change. Correct or not? Correct or not? It will change. It will change. The reason I am telling you is because what happened is, this person had a brought forward business loss. What did he have? He had a brought forward business loss. That brought forward business loss was about 24 lakhs something. He had a brought forward business loss. Now for those who remember, I told you, whenever you have a business loss from the past years, the business loss of the past years can be set off only against business income. Can be set off only against business income. So what happened is, this person came and said, my Pgbp income is 23,50,000, my brought forward loss is 24 lakhs, I can set off up to 23,50,000. I can set off up to 23,50,000, and he offered zero tax. He offered zero tax. Assessing officer came and said, you can only set off 20 lakhs. You can only set off 20 lakhs. So therefore, Pgbp will become zero. I want full tax on 3,50,000. Yes or no? I want full tax on 3,50,000 because it is a part of IFOS. It is a part of IFOS. Now this has come forth to you. This has come forth to you. The question which has come to you is, I have created an FD purely because I wanted to get a BGV. Purely because I wanted to get a BGV. This BGV is going to be used for my business. BGV is bank guarantee. Yes, I am purely going to use this BGV for my business. Because of the BGB I wanted, mandate condition of bank, I had to create an FD. Because of that mandate condition, I got an interest. Because of the mandate condition, I got an interest. I wish to put it under Pgbp. Assessing officer is saying it wants under IFOS. You are the judge. Please decide what is the answer. Do you want to tax it under Pgbp or do you want to tax it under IFOS? Why?
Got a bank guarantee on the recall business for the 20 if you made the FD and relating to it interest.
Okay. So you are telling me that it is purely because of the bank guarantee that the interest came and therefore it has to be Pgbp. Yes, Ritanya, agreed? Okay, perfect. This is what the decision also came. This is what the decision also came. The decision basically came and said that, dear sirs, please understand that the bank guarantee was not a decision by assessee. The FD creation was not a decision by assessee. This was done purely because it was a mandate made. This was done purely because it was a mandate made. It was a business requirement for me to get a BGV, and it is a requirement from the bank to have an FD to do that. Yes, I was forced to create an FD. And that force happened only because I had a business requirement. Understand, what goes into IFOS is those kind of items where I make a decision. Where what? I make a decision. Like I putting an FD is a different story. I putting an FD is a different story because there my intention is not to do business. There my intention is to earn additional money. There my intention is to earn additional money. That can go into IFOS. That can go into IFOS. Here my intention was never to earn the FD interest. My intention was never to earn the FD interest. Hey, when I created that FD, was I bothered about the bank guarantee more, or was I bothered about the interest more? I was bothered about the bank guarantee more, which means interest came to me as an ancillary item or as a predominant item. It came as an ancillary item, which means, am I bothered about that money? No, I am not bothered about that money. In which case, Supreme Court came and said, boss, let's not tax it under IFRS, let's tax it under Pgbp. Let's tax it under Pgbp. Yes or no? Yes. Read. It says, where the assessee had to deposit margin money with the bank for obtaining a bank guarantee. Where the assessee had to deposit margin money. What is margin money? Some extra money to bank for obtaining a bank guarantee, without which the assessee could not have won the contract for doing its business. Without which the assessee could not have won the contract for doing its business. Yes. So what has happened is, assessee has wanting a bank guarantee mandate to do a business for which he has deposited money, for which he has got a FD. Then any interest which is earned on such deposit will be taxable under the head Pgbp and not IFRS, as this interest is intrinsically linked to the business. It is intrinsically linked to the business. Yes or no? Yes or no? I will ask you the same question. I'll ask you the same question. What has happened is, there is a person running a sole proprietorship. This sole proprietorship person is having a savings bank account, and he's doing all his dealings from savings bank account. Since he's having a savings bank account will also give him interest. Question to you: that interest will be taxable under Pgbp or IFRS? Why? Why IFRS? Very good. Understand, the person had all the rights in the world to create a current account. The decision to put it in savings bank account and get an interest was his decision. Was it his business? No. Was it a mandate from business? No. Therefore, he made his own decision, and therefore this interest will be taxable under IFRS. In this scenario, I am being forced for it. And therefore it is taxable under the head Pgbp. Who is the person? The person is CIT versus K and Co. This is a Delhi High Court decision. Clear? Yes. Can we go forward? Illustration number 3. Illustration number 3. Yes. Now, what happened is, I am a fertilizer company. What company am I? I am a fertilizer company. I am making good fertilizers. And what happened is, I am selling all these fertilizers to poor farmers. Government of India came and said, because you are selling fertilizers to farmers, I want to promote your business. Therefore, I want to give you something called as subsidy. So what happened is, government in the current year decided that government will give 2 crores worth of subsidy to this person. 2 crores worth of subsidy to this person. Yes, this is what happened. Now what happened is, government decided to give 2 crores worth of subsidy. I went to government and I wanted to collect the subsidy. So I went to government and I came and said, sir, I've done so much fertilizers, give me 2 crores subsidy. Government at that point of time came and said, dear assessee, I wanted to give you subsidy, I don't deny it. I wanted to give you subsidy, I don't deny it, but unfortunately I don't have money right now. Let me do one thing. I will issue you something called as a bond. What will I give you? So what happened is, the government of India gave a bond to me. Bond, you know, no, it's like debentures. Where I am basically giving you a bond. In the future, I will redeem it. Yes or no? Yes. So what happened is, government of India gave a bond against the subsidy. In first instance, tell me, the moment you got the bond is worth 2 crores. Yes or no? The bond is worth 2 crores. If the bond is worth 2 crores, you know you are going to get money. Which means, this money which is going to come to you should be treated as subsidy, not treated as subsidy. So the year in which I got this money, I offered it to tax. Because it's a government subsidy, I have to give it. Yes or no? So government subsidy, I offered it to tax under the head Pgbp. I offered it to tax under that PGBP. Full 2 crores I gave off. Full 2 crores I gave off, saying that, sir, I have received a government subsidy, I have to tax it because government grants will come and say you have to put it to P&L, correct? So I gave it off. I gave it off. In the year in which I was supposed to get the money, from the government, I went to government and said, dear government, bond is expired, give me the money. Bond is expired, give me the money. Government came and said, yes, I will give you the money, but the thing is, I want to redeem this bond at a discount. So what happened is, instead of government giving me 2 crores a day, government only gave me 1 crore 80. Government only gave me 1 crore 80 because they redeemed the bond at a discount. Now, what happened? I actually offered to tax earlier 2 crores. Yes or no? Today, I have only received the bond of 1 crore 80, which means I made a loss of 20 lakhs. So what happened is, current year PGBP, I put an entry called as loss on redemption of bond. How much? 20 lakhs. And I claimed it as full deduction. Assessing officer came to me and said, dear Rahul, you have a fertilizer business, you got a bond from the government. The bond which you got from the government was an investment in your books. Since you have made a loss from that investment, it should be taxable under the head capital gains. So what assessing officer came and said, your consideration was 2 crores. Your redemption value is, your consideration was 1 crore 80. Your redemption value is 2 crores, which means you incurred a loss of 20 lakhs. And this loss of 20 lakhs was an LTCG loss. Because obviously bond will be for multiple years. Assessing officer came and said, you have an LTCG loss of 20 lakhs. Since you do not have any LTCG profits, please carry forward. I want to full tax on PGBP income. Now, assessee has come and told he wants to claim 20 lakhs as a deduction under PGBP. Assessing officer has come and told that he wants to put this as a LTCG loss and carry forward in the future years. Because the bond which you redeemed is a capital asset. The matter went to courts. You are the judge. What is the answer? Should the 20 lakhs be claimed as a deduction under PGBP, or should it be claimed as a loss under LTCG and carried forward?
Be done as a reduction under PGBP.
Why?
Because this bond, when he got also, he had showed it as an income under PGBP.
Okay.
So, though it became an investment, it was in the nature of an income only. If it had been come in the form of money, we would have shown it clearly like an income, and here also we had disclosed it like an income, and it's not an asset which was purchased.
Okay, question to you, Titania. Inter-syllabus, you have done IFOS, right? Yes. In IFOS, you had this concept called as gift, where the provisions come and say that if you are getting a immovable property for inadequate consideration more than 50,000 rupees, the stamp duty value versus the inadequate consideration, the difference of that will be taxable as gift for you, correct? Yes. The provision will also come and say that if you have taxed something as gift under IFOS, it will be added to the cost of the acquisition for the capital gains, correct? So which means the differential income which you got is being taxed under IFOS, but the cost benefit is coming under capital gains. Correct or not? So here also the same scenario, no? You have taxed something in PGBP, but I am moving the loss to capital gains. What is the problem? Yes, Gayatri. Are we going for PGBP or are we going for IFOS? Capital gains. Why? Since the subsidy is given for business, it will only be given for business always. Okay. The answer is Pgbp. The answer is Pgbp. You people are perfect judges. You know the answers, but you don't know how to justify it. Okay. Let's read. It says, fertilizer bonds which are given by the government of India in lieu of a government subsidy, would be treated as same as subsidy. Understand, no? Like you rightly said, Ritanya, what is basically happening is you have gotten bond. Ideally speaking, you were supposed to get subsidy. That does not change the fact that it was a subsidy. Okay, just because you give a bond does not change the fact that it is a subsidy. Yes or no? Yes or no? Tomorrow, when the bond was redeemed and you got a discount, did you actually lose the money on the bond, or did you lose the subsidy which you got in the past? You got a subsidy loss in the past. Yes or no? If you think about it very carefully, had this bond not been there, what would have happened? The government would have given you 2 crores earlier and then asked you for 20 lakhs back because you violated conditions. Yes. So technically in that scenario, what would have happened? You would have come and said, Rahul, 2 crores I have taxed in the earlier year, 20 lakhs government took back from me, so I will reverse my P&L. Technically that is what has happened now. The moment the government issued you a bond with a discount, the moment the government issued a bond with a discount, technically what has happened, you have lost your subsidy. Which means earlier you ended up offering higher subsidy. Should you have offered 2 crore subsidy? No, you should have only offered 1 crore 80 lakhs as subsidy. Yes or no? So therefore, income tax is coming. So the case law came and said, boss, capital gains makes no sense. The bond is not important. The subsidy is important. Subsidy has come down from 2 crores to 1 crore 80. So that has to be reversed first. Now the logic makes sense. Yes, let's read. It says, fertilizer bonds given by the government of India in lieu of government subsidy would be treated as the same as subsidy. Hence, any loss from the sale of the bond will be allowed as a Pgbp loss and not as capital gains loss. The case law is PCIT versus Gujarat State Fertilizers and Chemical Limited, Gujarat High Court. Yes or no? Yes. Hey, this is how I like to read case laws and all, because then you understand better. Okay, for me to read this is not a big thing. Okay, so that is how I read case laws. All case laws which we do going forward also will be in the same format. Okay, so work it out. If you need to write some notes, you need to prepare the fact background and all, do it yourself. If you want the summary notes, I told you already, I will already have a case law booklet. where the big detailed pattern of why this case law is there and what the facts were there is there in that case law booklet. Okay, I will share the PDF to you later. Where you will find the whole story, then the analysis, then the conclusion. This is only the conclusion. The analysis and the facts will be there in that. Okay, and the facts explained pandradana, I have put illustrations. The one thing which I wanted to clarify is the illustration which I have put is not the actual illustration. Okay, these are my understandings. These are summa examples given to you for better understanding. Okay, so don't assume that the illustration which I gave is the final answer. No, and the Mahindra and Mahindra cases was ulta scenario. I have done it like that because I wanted to illustrate better to you. Okay, so don't take the illustration on the face value. I was just trying to explain you the facts. Clear? Here, from exam perspective, Rahul, do I need to know the exact facts? Not required. They will change the example and only give. Okay, they will not use the same people and all. They will change the facts and only give you. The only thing which is important for you is the analysis and the conclusion. That is enough from my book also. Same, the illustration which I gave. The kind of illustration which I give, no, same illustration they'll give you. They'll come and say there is a person called ABC Limited. ABC Limited is in the business of fertilizing and and is due to receive government subsidy from the government. However, instead of receiving subsidy from the government has issued a bond which has been redeemed at so and so value. The assessing officer has contended that the difference of loss has to be taxed under the head capital gains, whereas the assessee has contended that it should be taxable under Pgbp. Discuss your views with analysis, decisions, conclusion. Okay, so they'll give you a fact pattern. The fact pattern will not exactly match the case law. It will be an understanding. You have to take an example from here. That is why I'm giving you vague illustrations. I'm not giving you the actual illustration also, because if I make you mug up the illustration, exam it will not help out. Okay, exam will be a generic definition. We have a chapter for that also. ICI, for all the case laws, they have issued some 10-15 questions, giving a pattern on how I will ask. Once we complete part A, part B and part C, I will do that also. We will discuss all those illustrations. Yeah. Yes, can we go forward? Great. What we have discussed till now is the charging section of Pgbp. Okay, the first page is over. The first page is over. Now I'm going to jump to the subject. I'm going to jump to the subject. Can we jump to the subject? Yes. Okay. Let's jump to the subject. Before I jump to the subject, let me also clarify this to you. When it comes to Pgbp, there are certain things which are important for you to know. The first thing for you to importantly know is that at no point of time does Pgbp mandate a system of accounting. At no point of time does Pgbp mandate a system of accounting, which means you are free to follow both the methods. It can either be a cash method or it can be mercantile method. Income tax has no restrictions. Income tax says if you want to follow cash, you follow cash. If you want to follow mercantile, you follow mercantile. It has no relevance. Which means in exam, you need to be extremely careful about what is being asked. Unless and until the question explicitly clarifies that it is a cash system of accounting, it is always assumed as mercantile. If it is a cash system of accounting, they will come and clarify to you in the exam. They'll come and say ABC is planning to follow cash system of accounting. In that case, you need to think as an accountant first. I'll give you an example. Question came and said that the assessee is planning to follow cash system of accounting. What? Cash system of accounting in which current year salaries payable is 5 lakhs. Current year salaries payable is 5 lakhs. Out of the salaries payable 5 lakhs, 3 lakhs has been already paid. 3 lakhs has been already paid. Balance 2 lakhs pertains to March. Still not paid. Additionally, what is his name? Owner has paid 6 lakhs as advance salary. For April to March of 24-25. How much should be allowed? This is what system of accounting? I'm following cash system of accounting. How much should be allowed in Pgbp? How much should be allowed in Pgbp? நம்ம புரியல question புரியல.
So this cash system of accounting, he would have recorded only 3 lakhs out of that 5.
Okay.
And then he would have shown that 6 lakh also.
Okay.
Whatever he has shown as,
Assuming we are only preparing the accounts right now. How much should I claim? Why?
Because as per cash system in his books, he would have shown 9 lakhs as an expense and he can claim that.
The fact that 6 lakhs is an advance salary has no criteria?
Because you had said that the system doesn't make up.
Understand, just because you pay someone advance salary does not mean that it's not gone out of your account. It has gone out of your bank account. The moment it has gone out of your bank account, cash system comes into picture, and therefore that is also to be claimed as a deduction. Can assessing officer come and say it cannot be allowed? He cannot say that. Because they're following cash system of accounting, which means the total deduction which you will make is 9 lakhs. Total deduction which you will make is 9 lakhs. Rahul, assuming this was mercantile system. Assuming it was mercantile system, what will happen? Can you claim the 3 lakhs? Yes. Can you claim the 2 lakhs which is not paid? Yes. Can you claim the 6 lakhs? Can you claim the 6 lakhs? Can you claim the 6 lakhs? No. Why, Rahul? Because it is pertaining to next year. It is pertaining to next year. So if it is mercantile system of accounting, you can only claim 5 lakhs. Yes or no? You can only claim 5 lakhs. Yes. So you need to be extremely careful about the method of accounting which is given in the exam. Okay. If the method of accounting is cash, you need to think as what you will do in cash system of accounting and then follow the method. ICA loves to play around these items. They'll come and say in the P&L there is 9 lakhs debited. Out of this 9 lakhs, 6 lakh pertains to payments of next year. Are you allowed? Not allowed? You will be allowed if it is following cash system of accounting. You will not be allowed if it is following accrual system of accounting. Clear? Yes. So method of accounting is not mandated in the Income Tax Act. You can follow either methods. Clear? Yes. Second, since you are doing Pgbp, there are certain words which I want you to know. I'm going to put out 4 words. You help me out with the words. Okay. First word is called as disallowed. What is it called as? Disallowed. Second word is called as added. Third word is called as allowed. Fourth word is called as reduced. There are 4 words. First word is disallowed. Second word is added. Third word is allowed. Fourth word is reduced. Which of those 2 have common treatment? Which 2 have common treatment? Disallowed and added. What is the treatment? You will plus. In disallowed and added, you will plus. In allowed and reduced, you will minus. Yes. Now, if you have figured me that part out, tell me what is the difference between disallowed and added. If you figured out that much, tell me what do you mean by disallowed and added.
Added is generally, normally adding any income, when we add it, we call it as add. If an expense is added back to the profit, it is disallowed.
Added means income, disallowed means expense, is it?
Sir?
Added means income, disallowed means expense.
We use it for income, we just add it, and for an expense which is not allowed, we use disallowed, indirectly adding it. The term which is used is disallowed for an expense.
What is disallowed? I know it is disallowed, so you're adding back. What is disallowed? Expenses which you are claiming as deduction. It is not allowable. Reduce the profit. As it is not allowed, you should add back to the income. Okay, that is disallowed. What is added? Okay, Ritanya, since you've used the word disallowed is for expense and added is for income, right? Okay, so disallowed is expense, added is income. In the same terms, tell me what is allowed and reduced.
Allowed is for expense, reduced is for
Allowed is for expense, reduced is for income. Okay. Basically, in simple words, if I have to clarify this to you, disallowed means something which is allowed initially and has to be removed. and has to be removed, which means for you to disallow something, it should first be allowed. Which means it should already be part of your net profit or should not be part of net profit. It should already be a part of net profit, yes or no? So which means this should be an item which is already in books. This should be an item which is already in books, yes or no? Yes. Come to the added side. Will that item already be there in the books? You are saying that I am going to add an income. Which means the income was already there, not there. Which means this is outside the book adjustment. Yes or no? Come to the allowance part. Come to the allowed part. Will the allowed part be already there in the books or will you extra give him? I am telling that I am going to allow additional expense. Which means it is already there in the P&L or not there in the P&L? Not there in the P&L. So this is an out of the book adjustment. It is an out of the book adjustment. Come to income. You are saying that I am going to reduce an income. How will you reduce an income when it is already there, when it is not there? Already there. When it is already there. Yes or no? Yes. In simple words, Rahul, something can be disallowed only if it is allowed initially. Something can be added only if it is not there already. Something can be reduced only if it is there but you don't want it, and something can be allowed only if something is already not given. See, understand, at the end of the day, whether you use the word disallowed or added, treatment is the same. Both are plus only, but the English makes an impact. In exam, using interchangeable answers will lose marks. Interchangeable words will lose marks. I'll give you an example. Okay, this example came up. This is a code decision. Tell me out. Basically, what has happened is, you might have heard about this provision called as 40AI. Have you heard about this provision called as 40AI? Yes, what is 40AI? Anyone? Very good. You are disallowing expenses for non-deduction of TDS. Yes or no? Yes, this is the background. We'll explain this. When I do the topic, I will come and explain to you. But this is what the idea is. Now, what has happened is, Rahul, you have an expense. You have an purchase of an asset. Okay. In the current year, what you have done is you have bought a machinery. Machinery price is 10 lakhs. Yes, you bought a machinery price is 10 lakhs. Yes. Now, what has happened is, this machinery, when you purchased, you should have paid TDS on that under section 194Q. Yes or no? So you bought this machinery. 10 lakhs is looking wrong. So let's say 100 lakhs. What has happened is, income tax comes and says that whenever you buy a goods, whenever you buy some products, you need to pay TDS under section 194Q for any amount exceeding 50 lakhs. So what happened is, you should have done TDS under section 194Q. You should have done TDS under section 194Q, but you forgot to do it. You did not do TDS, which means vendor full payment paichu. Now, did you deduct TDS, not deduct TDS? You did not deduct TDS. Yes. Assessing officer is coming to you and saying, dear Rahul, you bought a machinery and you were supposed to deduct TDS on that machinery. You forgot to deduct TDS on that machinery. So I am adding 10 lakh rupees to your net profit. I am doing what? Adding 10 lakh rupees to your net profit. Is assessing officer right or is assessing officer wrong? He says, I want 10 lakh profit, I want tax on the 10 lakh rupees. Is the assessing officer right or is the assessing officer wrong? Bye. Bye. Britannia?
50% should be disallowed in the.
That is 40 IA, ma. I bought this asset from a non-resident. Question is, assessing officer has added 10 lakh rupees to my net profit. Is the assessing officer right or is the assessing officer wrong? He's right. Ritanya? Okay. Let me read the provision of 40AI for you. Okay. The provision of 40AI comes and says, where the assessee incurs an expenditure on which TDS is applicable as per chapter, on which tax is to be deducted as per the provisions of chapter 17B. And the assessee has failed to deduct such TDS before the end of the previous year, or after deducting TDS has failed to deposit the money within the due date of filing of return of income, the expenditure which is claimed shall be disallowed. The expenditure which is claimed shall be disallowed. This is what the English is. This is what the English is. Two questions to you. Question number 1. Have I done TDS? Have I done TDS? No. Question number 2. Have I claimed the expense? Have I claimed the expense? Yes or no? Yeah, ma. Straight question, ma. Have I claimed the expense? Yes, sir. Where, ma? You have put machinery in P&L? Where have you claimed the expense? Question is again the same thing. Have you claimed a depreciation which is a corresponding item to the machinery, or have you claimed the expense of the machinery? You've claimed a depreciation on that machinery. Question comes and the provision comes and says where the assessee incurs the expenditure and the expenditure which is claimed should be disallowed. Have I claimed an expenditure? Can I disallow something? Is the assessing officer right? No. Understand, the word disallowed makes an impact. The word disallowed makes an impact. Disallowed means you should have first claimed it. Now claim podlana nee ennathukku disallow panna pora. Understand, what has assessing officer done? Has he technically disallowed net profit of 10 lakhs or has he added net profit to 10 lakhs? He has added net profit to 10 lakhs. Do you think assessing officer has the power to add 10 lakhs to the net profit? No. He only has the power to disallow 10 lakhs in the net profit. Does 40I give him powers to deem any income? No. The 40I gives him powers only to disallow an existing expenditure, which means the contention of assessing officer is not valid. The contention of assessing officer is not valid. Yes or no? Yes or no? Yes. You need to be extremely careful about the words you use. Okay. Every section in the act uses a specific word. The wordings will be like this. Like 40I came and said the expenditure so claimed shall not be allowed, or the expenditure so claimed shall be disallowed. In that case, it's a disallowance. Cases where you want an income. For example, 40A3. Cash payment. There is one provision which comes and says, if you claim the expenditure in the last year, but you made the payment of that in cash in the current year. Current year, can you disallow something? No, because payment is last year. So current year, what can you do? You cannot disallow, but you need to treat it. So income tax comes and says, the amount so paid in cash shall be deemed as an income. The amount so paid in cash shall be deemed as an income. Now, have they done disallowance or add-in? That is what the difference is. Please understand the fact that disallowance means you should have claimed it for you to remove it. If you have never even claimed it, can assessing officer disallow? No. He can at best deem an income. But deeming income can only happen if the act permits it. If you remember unexplained expenditure really we came and said, Rahul, unexplained expenditure comes and says that if you have not even claimed the expense, assessing officer will deem the income. In case you have claimed the expense, assessing officer will disallow the expense. Yes or no? Adana or no? Yes, this is what the idea is. Be careful about the fact you cannot claim an expense. You cannot add an expense which was never even claimed. I'll give you another example. ICI loves to do all this nonsense. Okay. What will ICI come and say is, ICI will say net profit is 10 lakhs. Not included in the net profit is a rent payment of 40,000 rupees, which is paid by cash. What? Not included in the net profit is rent payment of 40,000, which is paid by cash. Question to you, first of all, can you pay rent by cash in more than 10,000? No, which means the 40,000 which you paid should have been allowed, not allowed. Should have been not allowed. Is it already there in the net profit? Not there in the net profit. Not there. Do you have to again do something? You will come and say, anyway, it was not allowable. Still, it is not there. Why should not bother? I will ignore. At that point of time, will I come and use the word disallowed? No, what will I come and say? I will say it is ignored. I will say it is ignored. I will say, as per the provisions of section 40A3, any payment exceeding 10,000 rupees to a single person in a single day, more than paid other than by permissible modes, shall not be allowed as a deduction. In the present case, the amount was never claimed as a deduction, and therefore no further adjustment is required. Have I used the word disallowed? Have I used the word allowed? Have I used the word added? Have I used the word reduced? Nothing. It is an ignored definition. It is an ignored definition. Yes or no? Yes. The English which you use makes an impact on the examiner. Unnecessary telling something as added when it is disallowed will cause an interpretation issue. While in exam both are added only. Total also will tally. It will create an impression on the examiner that you don't know how to read. So keep those things in mind. Going forward, when I use the word disallowed, added, reduced, or allowed, focus on those. See where what is happening. Then make a decision. The reason I'm putting it out very simply and very clearly to you right away is because ICI in its exams love to play with you. Okay, you will give one question. They'll give you one question. In that question, some items will be given as part of net profit. Some items will be given outside net profit. Some items they will say nothing. Which means some items you have to make an assumption that it is allowed. Some items you have to make an assumption that it is there in the net profit. Some items you have to say it is not there in the net profit, therefore ignored. Every combination will work. ICI loves to play around. It's like trial balance. In accounts and all you would have done. Unakku or trial balance kudupanga, adukapra additional information kudupanga. What will you do? Trial balance you will say is a part. Additional information you will say not a part. So additional information you will take two line items. You will do one adjustment on both, or debit or podo or credit or podo. Yes or no? Same logic. ICI will come and say that the net profit for the business is 600 crores. Considered in the net profit is the following items. And then they will say additional information 10 items. Which means the items of 6 are there in the net profit. You need to make a decision whether you should disallow or reduce. You cannot add or allow. Additional information you will add or allow. You can never disallow or reduce because it is not even there. Clear, not clear? Yes. When we read the full-fledged questions, you will understand, but this is what the idea is. Any doubts? Okay, keep these things in mind. Very important for your exam purposes. Okay, the wordings which you use will make an impact on the examiner and also on your English. At the same time, when you go to the practical world, these words will make an impact. The decision which I told you right now, this is also a court decision. Where assessing officer added the whole 10 lakhs and went off. Supreme Court came, some High Court or Supreme Court came and said you cannot add 10 lakhs to the asset because it is not added, it is disallowed. You cannot deem an income, you can only disallow an expense. When the assessee has not even claimed an expense, you can never add something. Like Ritania said, maybe depreciation you can take a charge. There are contradictory decisions. One decision comes and says if the TDS is not paid, depreciation will be disallowed. The other courts come and say there is no such provision in the act itself to disallow, therefore it is allowed. Other courts come and say depreciation can be fully allowed even if it is a capital asset. Some courts come and say you can correspondingly disallow depreciation. Both the answers are there. For your exam it is not there. We are focusing on the expense part. In the expense part you can only disallow if you have already allowed. Clear? Ritania, all clear? Perfect. Yes, this is the basic rules which I wanted to give you in Pgbp. Okay, after I know the basic rules, I can now proceed in the subject. Can we proceed with the subject? Yes. Before we start Pgbp, we always split our Pgbp business into two. We always split our Pgbp business into two. One business we call them as a speculative business. The other business we call it as non-speculative business. Two businesses we have. One business is speculative business. The other business is non-speculative business. Rahul, what do you mean by speculative business? Income tax comes and says that if at all you enter into transactions with high risk, the chances of losses are higher or lower? Higher. Chances of losses are higher. Those high risk areas is what I call a speculative business. Because in those kind of businesses, I don't know how to find myself or prove myself. Answers happen purely based on luck. Simple example tara. Today you have went to someone and come and said, "Naalukku India jaikum. If India wins, I will pay 1 crore rupees to you. If India loses, I will pay 2 crore rupees to you. Do you know for sure that India will win? No. Do you know for sure India will lose? Which means you are making a hypothetical decision. You are making a hypothetical decision to make a 1 crore or 2 crore payment. Yes. Now in idle speaking market, this is a gamble. So whatever money you pay will be taxable under IFRS. But the idea which I am trying to prove is, think about it. You have just speculated something. You are trying to speculate whether India will win or India will lose. You have no idea. Unless and until you have done a match fixing, it is not confirmed. Which means it is a pure speculation. Something like this which is done on legal parlance. Is called as speculative business. You predominantly do all those things in share market. Where? Share market. Yes. What happens in share market, Rahul? There is this very famous thing in share market called as going long and going short. What is, Rahul, going long and going short? Basically, assume what has happened is, I know that 2 months later Reliance is going to increase price. Which means share value will increase or decrease. Increase. At that point of time, if share value is going to increase, it is better for me to sell my shares or it is better for me to buy shares? Sell shares, correct or not? Yes. What happens is, today I am not deciding that I want to buy shares of Reliance. I enter into a contract with you. Where I come and say, "Dear Gayatri, 2 months later I will come to you. I will want you to give me the shares at 100 rupees. Gayatri also said, "No problem, Rahul. 2 months later, come to me. I will give you the shares at 100 rupees. Why am I coming to you 2 months later for 100 rupees shares? I could have bought it today also, no? The reason I'm coming is because I don't even want the shares. What I'm going to do is, on that day 2 months later, you will give me the shares for 100 rupees. If market is quoting 120, what will I do? I'll immediately sell it off, which means without even doing the transaction, I've got a profit of 20. Did I take the shares from you? No. I directly sold off and I got 20. Ulta can also happen. I told you that I'll buy it from you at 100. I was expecting share will go up. Share actually went down. That day market is showing 90. I got the share from you at 100. I gave it in the market for 90. I incurred a loss of 10. Possible, not possible. This is called as going long. Rahul, what is going short? Exactly opposite. In going long, I decided to sell shares. In going short, I will decide to buy shares. So what will happen is, I will tell you that I will sell you my shares. For me to sell you my shares, I will buy from the market. Why am I doing it? Because I am expecting market will show 90. So what will happen? 2 months later, I will go to the market, buy it for 90, give it to you for 100. For me, free profit of 10. Did I get the shares? No. This is called as speculation transaction. Why is it called as speculation transaction, Rahul? Because today I am speculating that in the future it will be 90 or 120. Do I know it will be 90 to 120? No, I am taking a chance. That is called as speculative transaction. Income tax comes and says that when you enter into such speculative transactions, the risk of loss is high or low? High. The risk of loss is high, which means chances of you making losses in that business is very high. Vis-a-vis the chances of you making losses in your normal business. Yes or no? Income tax is saying, boss, if you are going to make losses in that high risk business, don't come and ask for set off of that losses with my low risk business. Don't come and ask for set off of those losses with my low risk business. If you have a problem, the loss of the high risk business should be set off against the profit of the high risk business. Set off the losses of high risk with the profit of the high risk. Don't come to me and ask me for set off against low risk business. In simple words, income tax comes and says, whenever you have a loss from speculation business, whenever you have a loss from speculation business, this loss of speculation business can only be set off against income from speculation business. It can never be set off against any other income. It can never be set off against any other income. So any loss from speculation business can only be set off against income from speculation business. Rahul, current year I don't have any speculation business income. What to do? Carry forward and set off in the future only against speculation business. Rahul, how many years can I do this? I can do it for a maximum of 4 years. I can do it for a maximum of 4 years. In simple words, what does this provision come and say? The provision comes and says, when you have a speculative business loss, it can only be set off against speculative business income. If you don't have any speculative business income, you can carry forward and set off against speculative business income for a period of 4 years. For a period of 4 years. Clear? Clear? Yes. Look at the example. Look at the example. I am currently into speculation business. I am currently into speculation business. Current year, my speculative loss is 2,30,000. My speculative loss is 2,30,000 and my normal business income is 10 lakhs. My normal business income is 10 lakhs. Rahul, what is my total income for the year? My normal business income for the year, my total income for the year will continue to be 10 lakhs. Why, Rahul? Because the 2,30,000 will be carried forward. The 2,30,000 will be carried forward for a period of 4 years. Very good. For a period of 4 years. Clear? Scenario number 2. Rahul, I have a business loss of 2,30,000. I have a business loss of 2,30,000. I have a speculating income of 10 lakhs. My total income is Yes, Sitanya, help me out. I want the number. 7,70,000. Why, ma? Very good. Understand. Restriction which is given in this act is only for speculative loss. It is not given for business loss. It is not given for business loss, which means it doesn't matter even if you have a business loss and a speculative income, it will still be allowed. It will still be allowed. How to approach this in exam, Rahul? I always tell one simple trick. Whenever you have losses in the question, whenever you have what? Losses in the question, never look from income perspective, always look from loss perspective. From a loss perspective, speculative loss comes and says you can set off only against speculative income. Speculative loss comes and says you can only set off against speculative income, but business loss comes and says you can set off against any income other than salaries. Okay, so from a loss perspective, business loss can be set off against any income other than salaries. Any income includes speculative income also, therefore it can be set off. Yes or no? Yes. So from an exam perspective, the best part about losses is to never look from income side. Never come and look at what is happening on business income or what is happening on speculative income. That is not the criteria. Always look it from loss perspective. If you look it from loss perspective, your idea will be more clear. In the first scenario, I had a loss of speculative, which means I can only set off against speculative income. In the second scenario, I had loss from business. I can only set it off against any income other than salaries, which means speculative can also be set off. Speculative can also be set off. Clear, not clear? Keep this in mind. Keep this in mind. When we do losses chapter, this will be more helpful for you. Okay, going back, let's read the theory along with us. It says speculative transaction means a transaction in which a contract for trading, which is purchasing or selling in any commodity, including stock and shares, is settled otherwise than by actual delivery. I am saying, boss, there should be no delivery. எனக்கு கையில product வந்து கூடாது. எனக்கு கையில product வரக்கூடாது. If I don't get a product, it is called speculative. Any income from speculative transaction shall be deemed to be a separate and a distinct business. Of the assessee. However, ask me, no, Rahul, I am Rakesh Junjunwala. My business itself is to do long and short transactions. My livelihood itself is running basis that. Do you think I will call it speculative then? No. For me to do this transaction only will give me my bread and butter, which means for me it becomes my normal business. So in that case, it is not considered. They are saying, however, the same shall not apply in case of a company whose principal business is trading of shares or banking or granting of loans and advances. Yes. So if your predominant business is into shares, banking or granting loans and advances, then there is no doubt it will be in there. Therefore, I don't want to consider it as speculative business. Then they're saying, if at all you are having any speculative losses, it can be set off only against speculative income. In case you're not able to set off, you can carry forward for a period of 4 years. Yes or no? Yes. Then income tax also comes and tells, boss, there are some transactions which may end up becoming speculative. Let me remove them off because these are genuine transactions. You have really entered them into for doing your business. What items are there, Rahul? First item is called as hedging contracts entered into in respect of raw materials, merchandise or stock and shares. What items? Hedging contracts which is entered into for raw materials, merchandise or stock and shares. Quick question, are you done with FM? Online pannirkingla FM? SFM? No. Jatanya, is FM classes over for you? Okay, great. Do you know what is hedging contract?
Future, we enter into a contract.
For? Come again.
We enter into a contract for purchase of.
How is it hedging then? You're just simply entering into contract for purchasing products. How is it hedging then?
So we hedge our payments basically.
Hedging contracts are basically a contract which is entered into with a bank. Or the third party to whom you're making the payment, Basically, this happens in a foreign contract. Okay. Assuming that you're in India, you're going to purchase raw materials from US. Now, what is happening is, will you purchase the raw materials on cash, or sometimes credit is also possible? So what happened is, I entered into a contract with a US customer and a US vendor, and I came and said, I will purchase your raw materials, but I will make you the payment 2 months later. Today, I have agreed that I will purchase $100. I'll purchase $100 worth of product. So I am ready to purchase $100 worth of product. Today, market is showing that $1 is quoting 80 rupees. $1 is quoting 80 rupees. Now, today, if you have to recognize the asset, you will recognize the asset as purchase account debit to creditor. Yes or no? That purchase account, will you show in US dollars or will you show in rupees? Will you show in US dollars or in rupees? You will show in rupees. So you have to show it as how? You will show it as $100 into 80 rupees. Yes or no? Yes or no? Yes. This is what you'll show. But understand, 2 months later you're going to make the payment. For the next 2 months, will rupee be remaining at 80 or will it change? It will change. It can become higher also, it can become lower also. Which means if 80 becomes 82, will you have to give more money or will you have to give less money? You'll have to give more money. Initially, you had to give only 80 rupees per dollar. Now you have to give 82 rupees per dollar. So you have to give more money. Yes or no? Now, this is a risk. This is a risk. 2 months later, you don't know what will happen. 2 months later, you don't know what will happen. 80 can become 85 also. It can become 65 also. It can become 105 also. Yes or no? You're in a huge risk right now. So what you'll do is you'll go to a bank. You'll go to a bank and you'll come and tell the bank, dear bank, I'm planning to buy raw materials from a person. I'm planning to buy raw materials from a person. I'm very worried. Maybe tomorrow market might become 85, 86, 95 also. Okay. I want to save myself. I want it to be final today itself. Do one thing. 2 months later, I will not make the US dollar payment. You make the US dollar payment. Who will make? Bank will make the US dollar payment, which means I will now make the payment only in Indian currency. I'll make the payment only in Indian currency. So what I'm telling the bank is, dear bank, I will pay you Indian currency. You pay the US dollars. Let's today itself agree what is the money you want. Bank came and said, you give me 80.5. So which means today itself, I will have confirmed to the bank that 2 months later, I will give you 80.5 worth of Indian rupees. 80.5 worth of Indian rupees. That day, I don't care what US is showing. It is your headache. You make the payment to my US vendor. Now tell me, have I confirmed my risk or not confirmed my risk? I have already confirmed my risk, because I know no matter how much it goes wrong, my total payout will only be 80.5. Now that day, even if market shows 100, I will only pay 80.5. Even if the market shows 50, I will only pay 80.5, which means for me, has the number become final or not final? The number has become final, which means have I avoided my risk or not avoided my risk? This is called as a hedging contract. What is this called as? This is called as a hedging contract. Hedging contract is basically a contract entered into with the bank in order to assure your risk and finalize a payment today itself, so that you don't have to expose yourself to the foreign exchange risk. Now tell me, this is a derivative. This contract which you have entered into. Tomorrow, will you get any money against it? No. Are you going to incur a loss? Yes, because you initially showed 80. Now you are showing 80.5, which means you have already incurred a loss of 0.5. Now question to you, this 0.5 has been incurred because you are exposing yourself to a luck, or because you are exposing yourself to a raw material purchase?
Raw material.
You have exposed yourself to a raw material purchase, which means technically this loss was incurred by you for your business purpose or for your luck purpose? For your business purpose, which means it's a genuine transaction, non-genuine transaction. It is a genuine transaction. Do you think you wanted to make it a speculative loss? No. I came and said, boss, when I was purchasing raw materials itself, I know there is going to be a loss of 0.5. So I want to take that 0.5 loss. It should be my normal business because it is pertaining to my raw materials. So therefore, income tax comes and says, any kind of hedging contracts which you enter into in respect of raw materials, merchandise, or stock and shares. Raw materials, merchandise, and stock and shares. Yes or no? Next is called as forward contracts. Rahul, what is forward contracts? Forward contracts is a derivative. This is also something which you learn in your FM. Forward contracts are basically those contracts which are entered into right now to obligate to something in the future. Like for example, today I enter into a contract where I am telling 3 months later, whatever shares I have, I will give it to you. 3 months later, I will have to give him the shares. Now tell me, in this, is there a delivery happening? Not happening. There is a delivery happening of shares. If there is a delivery happening of shares, is it a derivative? Is it a speculative transaction? No, it is not a speculative transaction. So they said not speculative transaction. This is a normal business transaction, which means even if you incur a loss, it will be called as normal business loss. Clear? Next, what is it called as? Trading in derivatives in recognized stock exchange. Yes. Forward contract is one of the derivatives. Other derivatives are covered here. Which is like futures, options, all those things. Again, when you go to FM, you'll learn all those. Those are also done in a recognized stock exchange, which means you're trying to do legal things. If it is on recognized stock exchange, SEBI is taking care of you. Which means therefore it will not be a speculative transaction. It will be a normal business transaction. Yes. Next. Trading in commodity derivatives in a recognized stock exchange on which CTT is paid. Now, what is commodity derivatives, Rahul? I don't know how many of you have noticed. when you're sitting at home and your parents are watching news, you will see that some news left side and bottom a ribbon varum. Okay, in that ribbon basically the name of the company will be given, the share green color arrow irukkum, red color arrow irukkum. Yes, that will be the share price increase decrease. Yes, same time in that same place some of the news channels will also show gold, silver, petrol, all those things. Yes or no? And you will see gold ku pakkathula price increase aayirukku, silver ku pakkathula price decrease aayirukku. That is the day when your parents will be discussing iniki gold adhikama aachu, let's buy gold nu solittu. Yes, think no, do you think actually gold is increasing or decreasing? No. Gold is at your home. Is gold actually increasing or decreasing? No. What is happening is gold is being traded in the market. Gold is being traded in the market in the form of commodity derivatives. What people are doing is buying and selling of commodity derivatives of gold. So instead of buying gold, they are buying the derivative of a gold, where they are coming and saying the more I buy, the more the demand. The more the demand, the more the price. The more the demand, the more the price. So when people start buying derivatives, gold automatically increases. This is called as commodity derivatives. What is it called as? Commodity derivatives. Income tax is saying commodity derivatives is also not a derivative, is not a speculative transaction, provided it is done through a recognized stock exchange. How do I tell it is done through a recognized stock exchange? Because I'll have to pay something called as CTT, which is called as commodity transaction tax. Only when I do a transaction through a recognized stock exchange will income tax ask me to pay, will SEBI ask me to pay CTT. Which means if you don't pay CTT, it will be called as a speculative transaction. If you pay CTT, not a speculative transaction. From exam perspective, the second half is important. The second half comes and says, if you are trading in agricultural commodity derivatives, these will not be called as speculative transaction even if no CTT is charged. Which means if it is an agricultural derivative, even if you don't pay CTT, if you don't do it through a stock exchange also, it is fine. It will not be called as a speculative transaction. The reason is because of late speculative transaction, agricultural commodities have been removed as not mandate for CTT. SEBI has made a decision that if you transfer or trade in agricultural commodities, CTT is not required to be paid. Therefore, they said, boss, even if CTT is not paid, it is okay. It is not a speculative transaction. Only if it is an agricultural commodities. Rahul, how will it come in exam? In exam, they will simply come and say that if you have an, the question will come and say loss from trading in agricultural commodities, CTT not paid. Loss from trading in agricultural commodities where CTT is not paid. Will you call it speculative, non-speculative? Non-speculative. You will call it as non-speculative. Clear? Yes. We are out of time, so we'll close for today. Next class, we are going to start with the topic where we are first going to look at the format, and then I'm going to start the topics. Most of the topics are going to be same as your inter, but there will be some additions for the current year, so we will check on those additions also. Yes. We have for today done some 1.5 sites. Please prepare that 1.5 sites and come for tomorrow's class. All right. Yes. Done. Thank you, people. Have a good day.